Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Hezbollah confirms that its media chief, Mohammed Aif al-Nabulsi, was killed in an Israeli airstrike on central Beirut. Meanwhile, Lebanese media reports the militant group has signaled a positive response on the U.S.-led ceasefire proposal. Hopes for a December Fed rate cut are fading as markets also brace for President Trump's return, while the Bank of Japan Governor Kazuo Ueda gives no clear hint about raising interest rates. And polls have closed in Senegal's parliamentary elections, with the nation's president seeking a mandate for financial reforms. Good morning again. It is just gone 8 a.m. across the Emirates, 6 a.m. here in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm Paul Allen in Sydney, where it's just gone 3 p.m. Monday afternoon. Welcome to Horizons Middle East and Africa. Let's take a look at how we are tracking on markets. We're seeing S&P E-minis trading a little bit to the upside by about 0.25% there. We do see yields continuing to grind higher as well. And as Jen mentioned there, we've now got a lot of nervousness around the Fed's next move. Some uncertainty about whether or not we're going to get that rate cut in December. Markets really pricing in as a coin toss at the moment. That said, the dollar's pulled back a little bit in terms of strength. Net longs, though, on the US dollar still rising the most since July. Treasuries have been edging higher, as I mentioned, and we heard from the governor of the Bank of Japan as well, Ueda. He's expressing a little bit of caution around a December rate hike, and that's weighing on the yen as well. Markets pricing in a 54% chance of an increase from the Bank of Japan at its next meeting. I want to take a look at the gold price as well. We did see it retreat over the last week, but something of a rebound now, rising about 1%, just hovering around $2,600 an ounce, a little bit below that. And of course, this has been impacted as well by some concerns about whether or not the Fed will ease in December, and the US dollar pulling back slightly as well. Let's take a close look at how markets in Asia are faring. Meanwhile, Avril Hong is in our Singapore studio. Avril.
Yeah, Paul, we're seeing Asia stock gauge sitting slightly higher, boosted by gains in South Korean and Chinese shares. South Korea is leading gains in the region because of what we're seeing on Samsung Electronics announcing that surprise share buyback plan, $7 billion worth of. Chinese shares, they're seeing traders mulling policy support. We had the securities regulator talking about how listed companies should boost value. But of course, we're keeping a close eye, as you just alluded to, on dollar yen after Ueda spoke. Because last Friday, when traders got wind that he was going to be making comments, we actually saw the yen gaining ground, but he proved to be cautious in terms of suggesting when the timing of the next rate hike might be, and we saw the yen actually weaken as a result, and that's worth noting because this is coming against the backdrop of a softer dollar. He speaks again later today, so we'll see if anything comes out of that as well. Guys?
Absolutely, and we'll check back in with you. Thanks so much, Avril Hong in Singapore for us. Let's turn to the Middle East. An Israeli strike in central Beirut has killed Hezbollah's chief spokesman, Mohammed Aif al-Nabulsi. The militant group confirmed in a statement, according to the Associated Press. Meanwhile, Lebanese TV network LBCI has reported that Hezbollah has signaled a positive response to the U.S.-led ceasefire proposal. Let's bring in Bloomberg's Paul Wallace, who is in Dubai for us. Paul, let's just stick with the latest on the truce talks in Lebanon. Are we any closer to getting a deal?
Hi, Jennifer. It does seem that we're moving in that direction. I do have to say there's still big obstacles for all the warring sides and the mediators to overcome before there's a truce. But certainly the fact that the Lebanese state is now saying it's looking at a proposal and has given some positive early signals, that is a sign of progress. However, we haven't heard much, if anything, from Hezbollah itself. And of course, the Lebanese state is not Hezbollah. The two can't really be equated. And key to what Israel wants is for Hezbollah to move its troops quite far away from the Lebanon-Israel border to the Litani River, which is, give or take, about 10-15 kilometers from the frontier. There's no real sign yet that Hezbollah is willing to accept that. And then the other thing is that Israel essentially wants the right to be able to continue striking Lebanon when there's a truce if it thinks that Hezbollah is breaking the terms of that truce. That's not something that the Lebanese state or Hezbollah are going to accept lightly at all. The proposal that Lebanon is looking at seems to exclude that, so it's a bit unclear whether Israel has sort of reined in on that, on insisting on retaining that right. So it's a bit unclear at the moment. So there is progress, but still big hurdles to overcome.
Is there any sense that things might be on hold until after Donald Trump takes power?
Some analysts have suggested that there's not a heck of a lot that the sides can do until Trump comes in and they know what he wants. But then, on the other hand, there are signs that Trump does not want the wars the war in Lebanon hanging over, or on his plate, or in his in-tray, if you like, when he comes to power in January. I think the bottom line is that Israel does want to end fighting in Lebanon as soon as possible if it can get what it wants in terms of Hezbollah moving back from the border and still being able to strike the militant group if it thinks it's breaking the terms of the truce. I don't think Israel is sort of waiting for Trump to come to power or looking at what's going on in the White House to determine things on that front. It wants a ceasefire, but it is setting a pretty high bar for that to happen.
All right, that's Bloomberg's Paul Wallace there in Dubai. Thank you. Well, Chinese leader Xi Jinping has told President Biden he's ready to work with Donald Trump to improve the relationship between the world's two biggest economies. But Xi also used the meeting to lay out a warning on China's red lines. Bloomberg's Katia Dmitrieva joins us now. So, Katia, G20 is just kicked off. What are we expecting to come out of this summit in terms of US-China relations?
Well, the G20 may have just kicked off, but we have sort of a preview of sorts from APEC and Peru, and many of the same leaders will actually be on those flights heading to Brazil for the G20. And the focus will really be, as you can imagine, on geopolitics and Trump-Xi. The only problem, I guess, is that Trump is not there. He's still in the States. And so Biden and Xi had a meeting over the weekend. It was sort of a chance for Biden to say goodbye, but also a chance for both of these leaders to outline a blueprint of sorts to come. As you mentioned, there were these 4 red lines that Xi had outlined, and they're not necessarily new. It's things that have been discussed and have been contentious between the two countries and will probably be contentious going forward. And those 4 lines include things like not containing, do not try to contain the Chinese economy, do not try to encourage democracy, and stay completely away from the Taiwan issue. So those kinds of red lines are things that have caused some conflict in the past. And although we didn't have a lot of, potentially new things come out of this meeting, it's clear that those will be contentious going forward.
Katia, when it comes to Ukraine, is there the potential that we hear from leaders on what is happening in the region and potentially what could happen moving forward once Trump does take office in January?
Yeah, those are these two issues are the biggest when it comes to geopolitical issues and some of the biggest challenges that will face Trump and his administration kind of going forward. There's more of a recognition ahead of the G20, and peace is already starting to move in regards to how to get this conflict ended. It's been 1,000 days. Leaders are going to be sitting down and trying to find ways of compromise. And there's more of a recognition that things like compromising on land, for example, we had Turkey's leader kind of suggesting that maybe things should be frozen where they are right now for a peace agreement. And you have a lot of other leaders kind of trying to come in and even before Trump comes in. But there is a recognition. Even Zelensky himself in Ukraine said that there will more likely be a settlement now that Trump is in power. So this is going to be probably one of the bigger priorities in the first year after January, that is, after the inauguration.
Great to get your reporting this morning. Bloomberg's Katia Dmitrieva joining us there in Hong Kong. Appreciate you being with us. Now, still ahead, why Neovision Wealth Management says Trump's tariffs may prompt a shift in global economic relations that could affect the dollar's position as a reserve currency. Stick with us. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Paul Allen in Sydney. Well, Asian shares turned higher with a rally by heavyweight Samsung Electronics offsetting earlier weakness stemming from reduced expectations for Fed policy easing. Let's bring in Ryan Lemand, CEO and co-founder at Neovision Wealth Management. Ryan, thank you so much for joining us. I want to start with the Fed because we've seen traders gradually pairing their bets around what to expect at the December meeting. It's now pretty much a coin toss whether it comes down to we get a 25 basis point cut or not. What's your view on this?
Well, Chair Powell has made a statement, and that statement is quite clear. He said, well, we're unsure yet. This is what we understand from his statement. Another thing we pull from his statement is the 50 basis point cut that happened in September. Let's remind viewers that this happened only twice in history, and what followed were massive crises. So was the 50 basis point cut justified? Was it too big? I'm not sure. So even the Fed is unsure about December. Markets are divided between stock markets and fixed income, and both are telling completely different stories. Retail sales are very strong. So I don't see a 25 basis point cut in December, given the current situation that we're in at the moment.
What does that mean then, Ryan, just moving forward? If you don't see a cut in December, do you continue to see a pause throughout at least the first few months of the Trump administration?
Well, Jennifer, what we see today is a 10-year at 4.5% and the stock markets at 23 times earnings. These two are not compatible together. Something has to give. So if there is no cut in December, we see 10-year rates at 5% and equity risk premium going below zero, which is obviously not a good thing. So we see stock markets in the U.S. probably going more towards the 5-year average of 18 times earnings. So this means that the S&P will have to go back below 5,000 points. So positioning here is very hard because there are so many elements that are in place at the moment. We don't know yet what President Trump will do. Will he pressure again the Fed, even though the Fed is independent, we know that? Will he pressure the Fed as he has done in his first presidency to cut rates? There are many, many unknowns today. So from a tactical perspective, positioning is quite complicated, and we do expect some volatility on the U.S. stock markets. And that is why we're advising our clients to go towards countries where we see tariffs being imposed on, because this is where governments will have to move, will have to support their markets, economy and stock markets.
Can you tell us about some of those countries, and do they include China? Do you have a suspicion the policymakers in China might be keeping a fair bit of dry powder in reserve for 2025 when the realities of the Trump administration really begin to dawn?
Well, Paul, I'm smiling because we've done very well on China. We started getting in early summer a few months ago. We've had a very nice run on the back of the announcements or positioning that was done by the Chinese government. We see $240 billion bazooka, what's called bazooka, support that is coming, in our opinion. So this will support Chinese stocks. The only unknown and uncertainty there remains the Chinese consumer, where it remains relatively weak. But from a stock market perspective, we do see some strength there. Another one would be India, where we've done very well as well. And finally, Europe. Europe, it's all pending on what the settlement will be with Ukraine. But we do see some opportunities in Europe from a tactical perspective, very short-term perspective.
Talk to us about what sectors in particular, Ryan, because Europe isn't always something that we hear from asset managers about moving into. I mean, where are you looking?
Well, again, we're bargain hunting. There's no specific sector. Rather than doing a top-down, we're doing a bottom-up, total stock picking, undervalued, dividend-paying, stability, non-cyclical. And this is where we're finding some value. These would anchor our portfolio. This is not really a performance kicker, but more of a stability, low volatility type of stocks. We still need developed markets in our portfolios. We cannot only go to emerging markets, China, India, Brazil, etc. So that is why Europe is very important. It's sort of an anchor, if you will. But I cannot give you a specific sector because it's purely stock picking driven, dividend stability, and non-cyclical.
If we're talking about anchors, I know you've got quite a large gold allocation, 25%, correct me if I'm wrong. You're not alone here. Goldman Sachs sees gold at 3,000 by the end of 2025. But are you worried about something?
Regarding gold, we see it as a very important asset on the back of the geopolitics, on the back of the dollar being less of a dictator, and we're seeing more of a democratic diversification of reserve currencies. We see gold rising in price, not because there's a shortage of gold or fundamental related to gold. It's more the US dollar weakening against the gold. This is our play. So we see the dollar, there's the price of the dollar, there's the value of the dollar, and then there's the purchasing power of the dollar. The price of the dollar is quite high. However, its value is dropping against gold. And this is why the gold trade is very important for us. And finally, purchasing power of the dollar is dropping over time, hence gold. There will be volatility. We've seen it. It went above to 2,700, close to 2,800, went back down, and this is when we start purchasing again. Yes, we see the target of 3,000 within reach, but again, there will be some wobble. There will be some opportunities to buy the dip, and we are advising clients to use these dips to buy more.
What would be the catalyst then, Ryan, for the dip in your perspective?
Well, the dip, we've seen it basically on what happened last week in the US. The strengthening of the dollar on the back of Jerome Powell's announcements has triggered that profit taking. So I don't see it as a weakness. It's more of a profit taking. And we did book some profits as well. So all of these contribute into these dips. We see more of these coming up every time there's a catalyst, every time there's a steepening in the yield curve, every time there's an announcement by the Fed about a pause, a strength in the US economy, we might see dips. And again, we see these as opportunities. Against 23 times earnings on the stock markets, we prefer gold in this case.
Ryan, still bullish. Good to get you on and get your insights. Ryan Lemand, CEO and co-founder at Neovision Wealth Management, joining us there this morning. All right, coming up, Senegal's ruling party claims victory in the latest parliamentary elections. We look at what that means for its economy next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasajja in Johannesburg. Now, the Associated Press says the ruling party in Senegal is claiming a comfortable victory in Sunday's legislative elections. The result could pave the way for the president to deliver an ambitious reform agenda. Let's bring in Bloomberg's Ndiro Oganga, who is joining us now from Kigali, Rwanda. So, Ndiro, talk to us about the latest and what we know at this point.
Thanks, Jen. So this is an election where 7.3 million people are eligible to vote out of the population of 17 million, and they're voting to elect 165 members of the National Assembly. The polls on Sunday opened at about 8 a.m. and closed at 6 p.m. Though the lines were thinning out by the afternoon, the turnout was not as massive as compared to the presidential turnout. There are pockets of violence here and there, but it was largely a peaceful elections. And these elections are a snap elections 2 years into parliament sitting because the ruling administration says there's a deadlock in parliament. They're unable to move forward with the economic reforms, anti-corruption reforms, and reforms that can address bread and butter issues like inflation and also unemployment. And like you mentioned, the outcome is a likely victory for the government because parliamentary elections more often than not mirror presidential elections, and people want to give the government an opportunity to be able to deliver on the promises that they made to them. This victory is very key for this administration. One, they need to pass the budget and also lay groundwork for the next IMF program. Outside of that, the markets are desperate for some form of stability, both economical and political, and this victory would be a first step in that direction.
So you mentioned the budget's coming up. How has Senegal's economy been shaped under President Faye?
We have seen that this economy has been struggling. Currently, they're going through a debt crisis because they understated their liabilities. A review has shown that their debt to GDP stands at 76 as opposed to the 65% that was reported under President Macky Sall. And debt to GDP is at 10% as opposed to the 5%. And because of this, we saw Moody downgrade their credit rating further into junk territory. The IMF suspended a program they had with them, $1.8 billion from 2023 and 338 billion CFA francs that was supposed to be disbursed this year is likely to come next year. In terms of projects that could catapult the economy into growth, they're looking at the Grand Ahmeyim project that has faced some delay, and the Sangomar oil development project has already come online, which is expected to grow the economy by 6% this year and about 10% next year.
All right, Bloomberg's Ondero Oganga in Kigali. Thank you so much for joining us. Well, the New York Times says President-elect Donald Trump is rethinking candidates for the role of Treasury Secretary. He's reportedly looking to invite new contenders for the role to Mar-a-Lago this week, including Fed Governor Kevin Walsh and Wall Street billionaire Mark Rowan. And Trump had been expected to pick either Cantor Fitzgerald CEO Howard Lutnick or Key Square Capital founder Scott Bessent for the post.
Japanese Prime Minister Shigeru Ishiba says he has no plans to meet with U.S. President-elect Donald Trump after attending the G20 summit in Brazil. The Trump campaign team has told the Japanese government that the president-elect will not meet with any foreign leaders before taking office in January. The two nations are still hoping to hold talks as soon as possible after Trump takes over. And a quick check at where markets are right now as they're positioned ahead of the trading day. If we take a look at U.S. equities, rebounding slightly, coming back up from the slump that we did see last week. S&P futures up about 0.3%. NASDAQ 100 futures almost up there we go, just 0.7%. Of course, this is a big week for earnings. We're waiting for NVIDIA to come later this week. We're also anticipating some big box retailers reporting later this week. We'll pay close attention to whether or not we do actually see equities make a turn after having one of their worst weeks in about 2 months. All right, now coming up, the Associated Press says an Israeli strike in central Beirut killed the Hezbollah militant group's chief spokesman on Sunday. More analysis with Control Risk's Associate Director Niamh McBurney next. This is Bloomberg.
This is Horizons Middle East and Africa, our top stories this morning. Hezbollah confirms its media chief, Mohammed Afif al-Nabulsi, was killed in an Israeli airstrike on central Beirut. Meanwhile, Lebanese media reports the militant group has signalled a positive response on the US-led ceasefire proposal. Hopes for a December Fed rate cut are fading as markets also brace for President Trump's return, while the Bank of Japan Governor Kazuo Ueda gives no clear hint about raising interest rates. And in today's Big Take, finance's marquee names are ready to gatecrash the $1 trillion artificial intelligence party.
That's right. It has just gone 6:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm Paul Allen in Sydney. It's just gone 3:30 Monday afternoon here. Welcome to Horizons Middle East and Africa. Let's take a look at how we are tracking on markets. And it's those twin forces really around the uncertainty to do with the Fed's next move. Traders now pretty much split on what's going to happen in December. Do we get a rate cut? Do we not? And combined with the potentially inflationary policies of the incoming Trump administration, there is a little bit of uncertainty about, and that's manifesting in a number of interesting ways. We've got yields continuing to creep upwards. We just heard from our last guest who thinks that 5% on the 10-year is a real possibility. The yen showing a little bit more strength there, although we did hear from Governor Ueda a little bit earlier as well, and he was also, well, having a bob each way, really, when it came to the prospect of raising rates at the BOJ's next meeting as well. Also seeing an impact on the gold price. That's been recovering. Goldman Sachs sees $3,000 now as a distinct possibility by the end of 2025. Well, let's check in on how markets in Asia are faring. Avril Hong's in Singapore. Avril, what are you watching?
Well, we're watching how Asia's stock gauge has turned pretty flat, pairing the gains from earlier, but we are seeing those gains still in South Korea and China. For China, some are attributing the recovery from the sell-off yesterday that we're actually seeing in the morning session today as partly to do with the securities regulator telling these listed companies, hey, come up with a clearer, firmer plan to boost valuation. Others have cited what the Chinese president had to say about, a sort of olive branch to President-elect Trump and saying that China wants friendship. But I thought I'd put things in further perspective for you. If you take a look at this chart, courtesy of MLive's Mark Cranfield, it shows you that amid the sell-off last week, we actually saw a climb in open interest, suggesting that dip buyers are emerging. And this is also perhaps unsurprising given how these stocks have come off the October highs, about 15% since then. So putting things in context as we see Chinese stocks mostly positive today. Guys.
Thanks so much, Avril Hong in Singapore for us. We'll check back in with you in just a bit. Back to the Middle East, though. An Israeli strike in central Beirut has killed Hezbollah's chief spokesman, Mohammed Afif al-Nabulsi. The militant group confirmed in a statement, according to the Associated Press. For more, let's bring in Control Risk's Associate Director, Niamh McBurney, who is joining us now in the studio. So, Niamh, let's just start with the situation in the Middle East and potentially what we could see developing in a new Trump administration. Are there things potentially that could be front-loaded before we see Trump getting into office, considering all of the factors that are sort of up in the air right now in the Middle East?
So what we could see being front-loaded is how Israel carries out its operations on the ground in Gaza and Lebanon over the next couple of weeks ahead of the inauguration on the 20th of January. We're aware that, Netanyahu and Trump have a very, very close relationship, but President-elect Trump doesn't always see eye to eye with Netanyahu, and there's potential for the Israelis to embarrass the new administration if they go too far in their activities. So there is a window of opportunity here for the IDF to hold on to the gains that it's made already, to take another step forward, proverbially and maybe even literally, in Gaza and in Lebanon, to be able to be in a much stronger position negotiating the ceasefire that's underway, the talks that are underway, but also just be in quite a strong position for when Trump walks into the door of the White House on the 20th of January.
Well, there's a couple of other complicating factors as well. Netanyahu's due to be in court at the start of December to face corruption charges. The security lapse that started this whole war also occurred on his watch. Do you see either of these things complicating efforts to bring this war to a swift close?
Ultimately, not really. When it comes to the potential court date, Netanyahu's legal team is currently trying to delay it for another several months. We suspect that that's an attempt to line up both that delay and how the IDF might carry out its operational activities in the next couple of weeks to gradually bring the Gaza conflict to a close. There is space here for the IDF over the next couple of weeks and maybe into early January to say, you know what, we've achieved our goals, even as those goals have moved several times over the last couple of months, fundamentally in line with what suits Prime Minister Netanyahu's domestic agenda. But he's using all of these factors to shape what's becoming an even stronger base at home. He has quite a lot of support, much more support than he did at the beginning of the war. And although this intelligence-related scandal is absolutely a scandal, I mean, it's really another chapter in the novel that is, the political survival of Benjamin Netanyahu, and that's not going to derail his career, at least in the short term.
Niamh, we got a report not too long ago about how Qatar was taking a step back from its mediation roles. Is there, if we're on hold in the U.S. For a new administration to come in, Qatar takes a step back, is there another world power that could potentially step in who Netanyahu would potentially listen to?
Ultimately, it doesn't seem like it. I think that story that we heard was an expression of sentiment of frustration by the Qataris, that they feel that they've very much been carrying the can over the last year. Egypt doesn't have as influential a role with Hamas as it would have done with Palestinian groups a couple of decades ago. And so Doha has had to take an awful lot of the flak. It's not ultimately going to drop out of the picture, but there's no one else that can really take their place. The relationship between Turkey and Israel, Turkish President Erdogan, and there are, structurally within Turkey, a number of people who could be mediators. But the relationship bilaterally between Turkey and Israel at the moment is so poor, that's not an option. So really, it's going to be Doha that continues to hold the pen on this relationship, even as their grip is becoming a bit looser.
During this entire conflict, the Abraham Accords seem to have held surprisingly firm between Israel and some of its Arab neighbours. Can you see those accords potentially being expanded and strengthened?
The durability of the accord has taken quite a lot of people by surprise, but it really speaks to the strategic nature of it for both Israel and the countries that signed it, the UAE, Bahrain and Morocco. Ultimately, it seems a very, very far-off prospect and seems very unlikely, but we do actually see potential for, under a Trump administration, for the Abraham Accords to be expanded. There's an awful lot of ifs here, but I would not be surprised if in 3 years' time we're talking about 3 to 4 years time towards the end of Trump's second term, Saudi Arabia being a signatory under the right conditions. He's a very good deal maker. He's also good at creating conditions whereby other people feel and other countries feel they need to make deals. So we are actually ultimately slightly more optimistic at the prospect of this under Trump relative to under a potential Harris administration, which of course now is not going to happen.
What could potentially derail that, Niamh? I mean, that is, as you mentioned, an optimistic viewpoint. In 3 to 4 years' time, potentially, you said an expanded Abraham Accords. But is there anything that could get in the way of that?
The most important component that could get in the way is the strategy that Iran decides how to manage its regional influence, and then the frozen and let's be honest, like non-existent negotiations around the JCPOA. The relationships that Iran has in other regions of the world, say notably Europe, who are key interlocutors in the JCPOA process, is weaker than it's ever been. We know that the Trump administration, we don't know the details of his Middle East policies, but we know the broad shape of them, and that's going to include maximum pressure 2.0. But Trump himself has suggested that there could be pathways to coming back to the table. But what we really need to understand is given the position that Iran has been in over the last year, it really feels backed into a corner diplomatically, politically, militarily. How is it going to, approach the new administration, not just when it is faced with maximum pressure 2.0, but perhaps when that policy shifts in the White House? We know that under the previous Trump administration, policies changed all of the time. There is flexibility, even as there appears to be stringency. And so it's really the Iranian response to this that's going to guide ultimately the success of whether we see that, as I said, optimistic view of an expanded Abraham Accords.
All right, Niamh McBurney of Control Risks, thank you so much for joining us today. Well, the US is said to be near a decision to lift restrictions on Ukraine's use of Western-made weapons to strike targets in Russia. Discussions have been shaped by North Korea ramping up support for President Vladimir Putin's army. Putin's forces launched a 120-missile barrage at Ukraine over the weekend, striking energy infrastructure. Coming up, the UAE's stock market surge draws ambitions to turn Abu Dhabi into a global financial centre. More on this next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. For the first time, stocks listed in the United Arab Emirates are now worth over $1 trillion. The milestone was helped by a surge in firms tied to an Abu Dhabi royal that account for more than a third of the total value and a flurry of local listings. Let's bring in Gokul Mani, Managing Director of Equity Capital Markets at JPMorgan, joining us now. So, Gokul, what is your expectation for this to continue? Do you continue to see more and more green shoots and upside for the region?
Well, thank you for having me here, Jennifer. Yes, we do forecast and we do foresee the level of ECM, equity capital markets activity, both from kind of IPOs as well as secondary issuance, to continue. There's a lot, there are several reasons why, around kind of growth in the region, sustainable margins out of corporates, and also an immense level of international kind of equity funds interest for the region.
Yeah, we do have a chart here that illustrates just the level of growth, the total value of stocks now listed in the UAE surpassing $1 trillion. I mean, how much more upside do you see here, and what sort of involvement do you see from smaller investors as well? Is there much retail interest?
It's a good point, Paul. Aggregate amount of equity value or market cap is an important metric because that just kind of, is a function for how share prices have increased. But we actually track two other metrics which are equally, if not more important. One is free float market cap, because one of the dynamics in the region is while aggregate market cap can be quite substantial, the amount of free float behind that, needs to increase, needs to have an uptick. Needs to have more secondary shares that, secondary sales of equity that promote that. And the other aspect that we as capital market practitioners track a lot more is the valuation multiples that market cap is a function ultimately of. So, you've got a wide band of that at the moment. You've got some very rich multiples out in the US, in India as well. And so therefore, if you look at the amount of growth left in this market, we see quite some more.
So, Gokul, you mentioned some other markets that, of course, have seen increased IPOs over the past few years. Don't you think companies in the region will be competing for investor interest and competing with some of these others, as you mentioned, other markets that have higher valuations potentially?
Yeah, Jennifer, yes, absolutely. Good, companies or strong companies should always kind of compete for, investment capital. And in kind of, previous years, you had a situation where capital markets in other parts of the world were muted. This region was very active. That competition was therefore, quite easy. Now, as kind of capital markets globally, US, India, several parts of Europe, are back, you're going to get that competition. But, given kind of growth trajectories in the region or growth aspects of those companies, the kind of margins they deploy, dollar peg, I think it's quite a level set field, and for those companies that demonstrate those qualities, cash flow is another big thing. It's fair game.
Gokul, I'm wondering if you can tell us a little bit about the Talabat IPO, which I understand you're working on. This is Delivery Hero's Middle Eastern unit, for those who aren't familiar with it. What sort of demand are you seeing for this, particularly from international investors? And do you have any cornerstone investors secured?
You know, Paul, given Talabat is currently an IPO live in the market, I cannot comment on that. What I can perhaps draw upon is a thematic around subsidiary deployment or subsidiary, IPOs out of listed parents. That's a theme that is very prevalent in APAC, in the US and Europe. We've not had much of that transaction structure in the Middle East, and I think that's a first for the region.
Do you continue to see that continuing, though, Gokul, in 2025?
In terms of subsidiary listings, it's quite case specific, Jennifer. But yes, I think where the case will present itself. Of course, now you have a precedent in the market.
You mentioned a little bit earlier that follow-on share sales are picking up. How busy do you anticipate this is going to be in the coming months?
Yeah, so the IPO market kind of has been prevalent, proven, and performing over the last 4 years or so. Secondary share sales or follow-ons, has come strongly into life over this year. A lot of these follow-on transactions require, high levels of liquidity off that underlying, but also the follow-on transaction itself creates that liquidity. So it's always a closely watched dynamic in terms of what comes first. But we do expect this to be a clear, large component of the ECM market going forward. Clearly, there's a lot of catch-up to do in international markets. 2/3 of activity is actually follow-on. IPOs is only a third. In the Middle East, clearly, we don't have that ratio. But that's just in terms of where the market is going, how the market will evolve. I think you'll still have more IPO volume than follow-on, but that's a market that is clearly developing at good pace.
All right, Gokul Mani of JPMorgan, thank you so much. And just as a side note as well, Talabat, we're expecting to hear the price range for that announced before the market open tomorrow on Tuesday. Well, still to come, Bloomberg News analysis estimates at least $1 trillion worth of spending is going to be needed to build out the digital revolution. We'll discuss why finance's marquee names are ready to gatecrash the artificial intelligence party. That conversation next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Finance's marquee names, including Apollo Global Management and Blackstone, are ready to gatecrash the AI hysteria. Analysis by Bloomberg News estimates at least $1 trillion of spending is needed for data centers, electricity supplies, and communications networks. So joining us now to discuss the Bloomberg Big Take today is Bloomberg's Nuali Purnell in Hong Kong. So Nuali, talk us through the story. We just had the full screen out about the Big Take that is out now by our colleagues. What jumps out at you about what we're seeing now?
Yeah, I think that there was a really great story about our colleagues, and what really struck me was we hear so much about NVIDIA and the big so-called hyperscalers like Google and Meta and Microsoft and others spending all these billions of dollars to get a piece of the AI revolution. And what was great here is it sets the scene for really a behind-the-scenes look at how Wall Street and private equity is getting into it. And the lead anecdote was JPMorgan hosting a dinner for private equity firms in New York, and the sentiment was, hey, look, there's enough money to go around, $1 trillion, the figure you mentioned, for what's estimated for what it's going to take to build out data centers and other related technologies for this thing. And so the banks and the private equity are saying, hey, we can work together and we can all get a piece of this. So it's really interesting behind-the-scenes look at how that's all shaking out.
It all sounds very promising, but are there any reasons to be cautious of the hype? And I'm sort of thinking back to the dot-com era.
Right. Well, as our colleagues mentioned in the story, for all of the success and quick consumer adoption that we see of technologies like ChatGPT and other AI bots, there's yet to be really a killer app for this new AI, what seems to be a burgeoning revolution. So you look back to the early days after the dot-com bust, Web 2.0, we saw e-commerce take off, we saw GPS-connected services like Uber and other services take off and develop into huge companies. So the question is now, we are seeing some consumer adoption, but is this really going to, take off and drive revenues? The big, so-called hyperscalers, Silicon Valley titans are betting that it is, but it's still early days, and so we don't know if all this investment that people are pouring into the technologies and into these huge data centers is really going to pay off in terms of return on investment for some of these companies and funders.
Newly, let's look ahead to NVIDIA report their earnings coming out later this week. What is the focus here? What are you paying close attention to?
Yeah, well, they're seen as a bellwether really for demand for generative AI services. Of course, they make the most sophisticated chips that are used, processors that are used for building some of these large language models. So people want to see, do people still want to buy these? What is their demand like? And we've seen, of course, this year alone, NVIDIA's market cap has nearly tripled. So they're seen to be, really at the cutting edge of a demand for some of these things. There's also going to, I think, investors will want to watch, is there any indication that the potential tariffs or sanctions from the next Trump administration, is that going to be an issue for NVIDIA? Although some analysts have pointed out already that their revenue exposure to China is significantly down from previous years, so that's likely to be less of a worry.
All right, Bloomberg's Newly Purnell in Hong Kong, thank you. Let's take a look at how markets are tracking at the moment. We saw a fair bit of heavy selling in the major US markets towards the end of last week, but S&P futures suggest we're setting up for a bit of a rebound today. NASDAQ futures in the green to the tune of about 0.75%. A couple of uncertain factors weighing on markets at the moment, though, mainly around what the Fed's going to do next month. It currently looks like a coin toss as to whether or not we're going to get another rate cut. Well, that is it for the first hour of Horizons Middle East and Africa. I'm Paul Allen in Sydney. Stay with us for the second hour, starting in a moment.
This is Horizons Middle East and Africa. Our top stories this morning. Hezbollah confirms its media chief, Mohammed Afif al-Nabulsi, was killed in an Israeli airstrike on central Beirut. Meanwhile, Lebanese media reports the militant group has signaled a positive response on the U.S.-led ceasefire proposal. Hopes for a December Fed cut are fading as markets also brace for President Trump's return, while the Bank of Japan Governor Kazuo Ueda gives no clear hint about raising interest rates. And polls have closed in Senegal's parliamentary elections, with the nation's president seeking a mandate for financial reforms. Good morning. I'm Jennifer Zabasaja in Johannesburg, where it has just gone 7 a.m. Welcome to the second hour of Horizons Middle East and Africa. And of course, welcome to a new week. Let's see where markets are positioned ahead of the trading days, at least in the U.S. and Europe. Right there, as you can see, a bit of green, quite a bit of green, as we can see for U.S. equities. We see S&P futures and NASDAQ 100 futures edging up at the moment. And really, the question is, what will we see from NVIDIA? That is coming later this week. They will report earnings, as well as big box retailers such as Walmart and Target. Equities, though, climbing back after quite a difficult week, at least in the U.S. In 2 months. And as we saw the Trump trade slightly fading away, and of course, as did Fed rate cut bets. If we take a look at the 10-year yield right now at 4.4355, again, awaiting more clarity on the trajectory of the Fed and what we'll see from a second Trump administration. Paying close attention as well to the yen-dollar cross right now. The yen weakening ever so slightly against the dollar. We had those comments from Governor Ueda, cautionary commentary about the path of BOJ cuts right now. now. If we take a look at that crossing at 154.64, and the expectation potentially we stay around there, but also the question is, what will we see from the Bank of Japan in December? We're also closely paying attention to the price of gold, and I want to bring this chart up as we talk about that. It's rebounding ever so slightly. Take a look at what we've seen just this year. Last week was a difficult week for gold. We saw the bullion weaken about 4%, now climbing up ever so slightly. This could potentially be attributed to a slightly weaker dollar, and of course those investors really reassessing what we do see from the Fed, but a slight uptick for gold right now. Now, let's check in on how markets in Asia are faring. Avril Hong is standing by in our Singapore studio. Hey, Avril.
Hey, Jen. Yeah, we're seeing Asia stock gauge flat today. I talked you through earlier today about why we're seeing this Chinese and South Korean outperformance, but I wanted to highlight now what we're seeing in Japan, because the declines you're seeing on the Nikkei and the topics today come in spite of that yen weakness. And this is after a bout of corporate earnings disappointment from last week. The sectors that we're keeping a close watch on today include pharmaceuticals. They're tracking their US peers lower, and this is after President-elect Trump said he'd be appointing vaccine skeptic Robert F. Kennedy Jr. to the Department of Health and Human Services. So something to keep in mind in terms of sector moves. The other bunch of stocks we are watching very closely in the Asia Pacific, and you alluded to some of this earlier, is the Asia chip makers. And we have been seeing them underperforming after the US election on concern of Trump's tariffs. The one thing that we might be watching out for this week to give them a sort of boost, those NVIDIA earnings. Jen.
That's right. Thanks so much, Avril Hong. We'll come back to you in just a bit. Avril Hong there in Singapore. Now, world leaders are gathering in Rio de Janeiro this week for the G20 summit, where they're expected to show unity on climate action and global trade rules, two areas threatened by U.S. President-elect Donald Trump. Bloomberg's David Gura has more from Rio.
On the formal agenda for this G20 Leaders Summit are debates about climate change and sustainability, global trade and development financing. But there will also be some hard conversations about conflicts around the world, including those in the Middle East and Ukraine. Russia's President Vladimir Putin declined to come to this week's summit, and Vladimir Zelensky, the president of Ukraine, wasn't invited to attend. This summit comes at a time when the winds are starting to change when it comes to geopolitics and the global economy. And the G20 Leaders Summit comes on the heels of another gathering of world leaders in Lima, Peru, the APEC Summit. While he was there, President Biden sat down with his Chinese counterpart Xi Jinping for a one-on-one meeting.
We haven't always agreed, but our conversations have always been candid and always been frank. We have never kidded one another. We've been level with one another. And I think that's vital.
Those two leaders last spoke in April by phone, and President Biden used this opportunity to stress how much the relationship has improved since he's been in office. There's now open communication between Washington and Beijing after 4 frosty years when Donald Trump was in the White House. Of course, Trump is heading back into power in the United States, and the uncertainty about what that means loomed large over that summit in Peru, just as it looms large over this one here in Rio de Janeiro. President Xi stressed that it's in both nations' interest for there to be a good relationship between the U.S. and China, but he said China would not be afraid to fight back if the U.S. crossed red lines. In Rio de Janeiro, David Gura, Bloomberg News.
Thanks so much, David Gura, for that report. Let's turn to the Middle East. The Israeli Defense Force has confirmed a strike in central Beirut has killed the Hezbollah militant group chief spokesman Mohammed Afif al-Nabulsi. Meanwhile, Lebanese TV network LBCI reports that Hezbollah has signaled a positive response to the U.S.-led ceasefire proposal. Let's bring in Bloomberg's Dan Williams, who is in Jerusalem for us. So, Dan, let's just stick on the latest with the truce talks in Lebanon. Are we any closer to the deal? How are you interpreting some of the rhetoric that we are hearing from the various sides in this conflict?
Well, I think certainly on the Israeli side, there's openness to a truce. Hezbollah has been really keeping its cards close to its chest. I don't think there's any denying the fact that Hezbollah is at a military disadvantage. Had they retained the original arsenal they had before the war, we'd be seeing perhaps thousands of rocket and drone strikes a day on Israel. That's been reduced to scores or at most 100 or so every day. Meanwhile, the Israelis are churning away with airstrikes targeting high-rise buildings that they say are linked to the militant group, especially in and around Beirut in recent days. As you noted, The head of the Hezbollah media office was killed in an Israeli strike yesterday. The IDF saying that he was responsible for propagandizing on behalf of the group and against Israel. That admission came out just about an hour ago. If indeed Amos Hochstein, the US envoy, is back on his way to the region this week, I think that would suggest that we are on the verge of a deal, because there is a sense that we are at a do or die moment, a time when really another mission by this man for the outgoing Biden administration would probably only be warranted if the sides are closer than public perceptions might suggest.
But are we likely to see any real movement, Dan, on this before Trump takes office in January? I mean, there's a lot of people anticipating a reversal in some of the strategy that we saw from the Biden administration. What, if anything, can happen in the last few weeks?
Well, that's a very good argument, but there's a counter argument that Hezbollah, other members of the Iranian axis, and Iran itself might see this as an opportunity to douse the flames of this conflict before Trump comes in, given that they might see him as a bit of a wild card and that their fortunes might take a turn for the worse once he's in office on January 20th. So there is a counter argument, a counter theory that now would be the time for Iran to back down. In fact, there is some speculation in the region that Israel could see this opportunity, these coming 2 months, these coming few weeks, as an opportunity to escalate against Iran directly, on the understanding that the Trump administration would help it contain any fallout from that, while at the same time the new president will not want to come into office burdened with a fresh confrontation, a fresh escalation in the region. It's very hard to tell, but certainly I'd say everyone in the region is now on tenterhooks, given what will come in the coming weeks and what the initial weeks and months of this new administration will hold for everyone involved.
All right, Dan Williams in Jerusalem, we're going to leave it there. Really appreciate your updated reporting there. Now, as we told you earlier today, Asian shares have turned higher with a rally in heavyweight Samsung Electronics, offsetting earlier weakness on concerns about slower easing from the Fed. Joining us is Anita Krishna Gupta, CIO at the Office of Equity Strategy Head at Emirates NBD. Anita, thanks so much for joining us. Let's just start here. We mentioned that we're seeing a bit of a turnaround when it comes to Asian equities, but I noticed that in your notes, you're overweight India and still neutral on China. Are you potentially looking at changing your positioning?
Hi, good morning, Jennifer. We've actually just changed our positioning back from overweight China to neutral China. So the whole year, practically, we were overweight India. In September, we decided to go overweight China as we expected stimulus effects to, start weighing in on real estate and on other sectors of the China economy, and hopefully boost consumption. We haven't seen that boost in consumption. The numbers coming out of China are not indicative at all of consumers starting to increase demand. And even the recent retail sale figures we saw out of China were basically automotive related. So we would at this point continue to be neutral China, no rush to get back into China. On India, we see more upside with the recent pullback.
So, Anita, could that change potentially? We were speaking with a guest earlier who is anticipating the bazooka to come in China. You're not expecting that in 2025, especially when we think of a Trump 2.0 and potentially Chinese authorities trying to get ahead of that or counter that?
What happened with China recently was all the tension around trade tariffs and the possible effect on China exports. We think that the Trump trade, as it's called, it's kind of faltering a little bit now, because obviously the first week we saw the biggest impact. Now we would look at China on a standalone basis. We would, of course, watch for tariffs, which probably would not be 60%, would probably be way lower. There would be negotiations. However, looking at China, as I said, just the domestic economy, we would wait for further green shoots before we go back overweight. We also look for certainty in markets. We look where we have a very transparent path to earnings growth. So India is giving us that right now. It doesn't mean that we would not go back overweight China, but like the Fed, we would watch the data.
The Fed does always remind us that they are watching the data. Anita, let's turn to U.S. equities, because I mentioned last week we did see that Trump trade faltering ever so slightly towards the end of the week. It is seeing a little bit of reversal, though, clawing its way back into the green. Do you see more upside for the end of the year? Potentially we get to 6,000 again and it stays there and it continues? Or potentially do you see U.S. equities and that Trump trade continuing to weaken?
We've had 4 different markets lead this year, from Japan, China, India, and the US. And currently we've got the US leading market returns. US valuations forward 1 year PE is around 22 times, and that's not too expensive compared to 5 years. So what do we expect for the end of year, looking at already 25% gains for the S&P 500, 22 times PE? The next big catalyst for us, of course, is NVIDIA earnings. So far we've got, if NVIDIA does meet expectation, which is about 80% growth in revenue year on year for the last quarter, that would have the Mag 7 stocks roughly up about 30% year on year for earnings. Now, looking at the S&P 500, 6% earnings growth for Q3, expected to continue into 2025. So we stay positive US equities, we stay positive technology. However, we do expect volatility around events such as NVIDIA earnings. We are hopeful that this level of returns would be retained into year end. That is our expectation at this point.
Does it broaden out, though, past tech, Anita?
Does it broaden out, sorry, in terms of the rally? Is that what you're asking?
Yeah, do we see, if we do see volatility come the NVIDIA earnings on Wednesday, and potentially we do see more upside for tech, do we see that broaden out, though, to other sectors?
Absolutely, because at this point, we've got a combination of financials and technology leading sectors. So we've already seen that rally broaden out. Financials have gone up on the hope of a strong economy, and also the slightly slower trajectory of the Fed cutting rates. So far, the Fed cutting rates has still been positive for banks. The consumer stays strong, retail stays strong. So with that in mind, I think the rally would broaden out. Of course, healthcare has taken quite a beating, and that's on the back of any appointees that come up in President-elect Trump's government. The rally at this point would continue to favor technology, financials, and any sectors seem to be winning from potential, change in policy from President Trump.
Great to get your insights this morning. Anita Krishna Gupta of Emirates NBD. Thanks so much, Anita, for joining us. Now, still ahead, we'll hear exclusively from Google's Director of EMEA Android Partnerships, that is Mariam Abdullahi, on the company's investments in Africa. But up next, Senegal's ruling party claims victory in the latest parliamentary elections. We'll discuss what it means for the nation's economy next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasadja in Johannesburg. Now, a fight is building at the UN climate talks in Baku over whether countries should recommit to last year's historic pledge to transition away from fossil fuels. Saudi Arabia is leading a pushback using a mix of delaying tactics and outright blocking maneuvers. Let's bring in our Saudi bureau chief, Christine Burke, who is joining us this morning from Dubai. So, Christine, tell us what's happening here.
Well, good morning, Jen. I think to understand exactly what's going on now, we need to first remember what happened last year at COP28, which was held here in the UAE. So it was during that event that we got this landmark agreement where oil-producing nations agreed for the first time out of the COP meetings to transition away from fossil fuels. But going into that agreement in the days leading up to it, there was a bit of drama, and it also centered around Saudi Arabia. Basically, Saudi Arabia had said that it would absolutely not agree to any kind of agreement or any kind of deal, rather, that would agree to phase down or phase out fossil fuels. Essentially, what we saw happen after that was countries agreed to water down language in that final agreement, and ultimately they agreed to transition away from fossil fuels instead of phase down. So really, that language last year, while it doesn't seem like a big deal, it was a big deal, and it did hold up negotiations. Now, here we are a year later, hearing that once again Saudi Arabia is kind of kicking up a little bit of a fuss at COP29 that's happening in Baku.
Right. And I remember, Christine, last year there was a lot of criticism really about watering down that language, especially from climate advocates, because a lot of the detail, I mean, it is in the language, right? This is all about that. So when we talk about the disagreement now, where is it? What is this push that Saudi Arabia is making?
So what sources have told us is that U.S. and Europe, what they want to see is countries coming together and doubling down on the agreements that they made last year to transition away from fossil fuels. Specifically, they see the need to kind of recommit to what we saw come out of the COP28 meeting last year in order to assure that countries do not backtrack. Now, what we are told is that Saudi Arabia is using delaying tactics and other things to hold up a deal. And I think what it really comes down to here, what it sounds like it comes down to, is interpretation of what exactly the commitments, or what exact commitments were made last year. So Saudi Arabia's view is that the deal last year, in which countries agreed to potentially bring more renewable energy capacity to the market and boost energy efficiencies, Saudi Arabia believes that countries should be able to choose from a range of options to bring down greenhouse gas emissions, whereas what we're being told is that U.S. and European leaders that are at COP29 believe that countries last year agreed to actually do all of these things and not just a couple of these things. And so that is where the disagreement seems to be now. And over the days ahead, it sounds like what needs to happen then is more clarity needs to be had on what exactly was agreed last year and what kind of commitments are needed to be recommitted to this year.
Right. And Christine, really quickly, I mean, you talked about what's ahead this week. The second week is always very important at these climate talks. What are you focused on?
Well, I think the other key thing that we are expecting is that currently there's a deal in place to provide $100 billion in climate financing to some of the poorer and more vulnerable nations to combat climate change. We are expected to see that current deal being replaced because there is said to be a need for more funding. So negotiations and talks should be happening around that, with the potential for a new deal for more climate financing.
All right. Thanks so much to Bloomberg's Christine Burke joining us from Dubai this morning, our Saudi bureau chief. Thanks, Christine. Now, coming up, Senegal's ruling party claims victory in Sunday's legislative elections as the president aims to deliver an ambitious reform agenda. Next, we discuss the details with Mucahid Durmaz, the senior risk analyst at Verisk Maplecroft in London. Stick with us. This is Bloomberg. This is Horizon's Middle East and Africa, our top stories this morning. Iran braces for wide-reaching power outages this winter, struggling to keep the lights on, despite having the world's second biggest reserves of natural gas. Google's Android division is seeing double-digit growth in services revenue across much of Africa and the Middle East. Our exclusive interview with the company's director of EMEA Android partnerships is coming up later this hour. Plus, stocks listed in the United Arab Emirates top $1 trillion in market value. We look at what's behind the surge. But for now, it is just gone 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg. Welcome to the second hour in the second half of Middle East and Africa. Let's take a look at where markets are positioned ahead of the trading week. And if we can look at U.S. equities, clearly there you're seeing some green. That is significant because what we did see from last week is we saw U.S. equities pulling back slightly from that Trump trade that we had seen post-November 5th. The S&P actually last week slid more than 1% on Friday, erasing more than half of its post-election gains there. But what we see with S&P futures up about just over 0.2%. Also, NASDAQ 100 futures up about 0.7%. We're also watching closely the U.S. 10-year yield. We did get some commentary, of course, from Fed Chair Jerome Powell last week, suggesting that potentially the Fed is not in a rush to continue to cut rates. We've had varying viewpoints from our analysts throughout the morning, but if we take a look at the 10-year yield at 4.4355, and of course, also the USD yen pair is in focus. We did get some commentary this morning from Governor Ueda suggesting, again, some cautionary comments about the path of BOJ rate hikes. Right now, the yen at 154.67, 68 there. We'll see whether or not that continues to change as the markets interpret those comments that we got earlier today. And I'm also looking closely at the price action of gold. Gold has been very fascinating. Again, we had some analysts this morning and some investors saying that the time is now to pour into gold. But if we take a look at the price of gold rebounding after we saw bullion lose about 4% last week, right now, as you can see year to date, slowly seeing an uptick. This, again, could be attributed to the slightly weaker dollar that we're seeing and, of course, some of the reassessment of the Fed rate cut expectations. But for now, let's check in on how markets in Asia are faring. Avril Hong is standing by in our Singapore studio. Hey, Avril.
Hey, Jen. Yeah, you touched on some of this, right? The BOJ and how that is impacting dollar yen. I thought I'd put things into further perspective because we did see the yen gaining ground against the greenback last Friday, right? As traders got wind that Ueda would be speaking today. This is seen as one of the last windows of opportunity where he can kind of address the market as to when the next hike from the BOJ might potentially be. He spoke twice today. The first time he spoke, actually not giving anything away, sounding very cautious about potential timing of the next rate hike. And we saw the yen give up those gains from Friday. He spoke again in the past hour or so, and again, not giving very much away, saying that they will make the appropriate December decision based on the data. So to some, this sounds like a BOJ governor that's just kicking the can down the road in terms of signals of rate hike timing. And this also sets the stage potentially for a lot of volatility in dollar yen. Keep in mind how even the greenback might come in focus given how, the Fed's December decision is at this point a bit of a coin toss. Jen.
Yeah, that's right. And we'll get some more Fed speak this week, potentially providing more clarity. Avril Hong in Singapore, thanks so much for that update. Let's turn back to the Middle East. Iran has the world's second biggest reserves of natural gas, but that's still not enough for the country to keep the lights on this winter. The Persian Gulf nation is facing wide-reaching power outages, including scheduled blackouts across Tehran and other major cities. To get more, let's bring in Bloomberg's Middle East energy reporter, Anthony DiPaolo. So, Anthony, why is Iran having so much trouble with its energy supply, despite what we are seeing, again, another resource-rich country?
Yeah, good morning, Jennifer. Exactly. They do have these huge gas and oil reserves, as you mentioned, but they are not able to get that to the customers. It's because of the inefficiency in the system, partly because of the lack of investments that have gone into the power system. Means that those power plants are inefficient. They don't have enough of the pipeline and the compression networks set up to get the gas there. So Iran, even with, as you said, the second largest reserves, they are still an importer of gas because they do import gas into some of the areas of the country that, say, border with Turkmenistan that aren't connected to the Iranian gas grid. It's easier to get gas imported from across the border. So they do import. And they've really not been able to get very much going in terms of exports, even despite that huge resource. They do export some to Iraq, which has its own problems with its power system, and some in through Turkey. But that's potentially a massive export income possibility there that they haven't been able to exploit. And then beyond that, they're not even able to provide the full-time power to some of the customers there. Usually they do have some rolling blackouts in the summer months. Now we're seeing them in the winter months, and what we're hearing is that these are particular ones because these are scheduled. They're taking times at certain places, and they're very widespread across the country. So that's a particularity in this round of blackouts, Jennifer.
We've seen, Anthony, similar situations playing out across the African continent, of course, here in South Africa for quite some time. When we talk about what the government can do to step in, what, if anything, are they doing at this point in time?
Yeah, and again, getting back to that main difficulty, the main difficulty is investment, and it is the income that comes from their energy industry. The biggest exports from Iran are the oil exports. They have ramped up now over the last period of several years to near capacity, but still, Iran is forced to sell its oil at a certain discount because of the sanctions there. It is a problem for them to sell that oil, so that makes it harder for them to bring in that income, which is needed for the investment. On top of that, they've long had a series of incentives, some of which the governments have started to roll back in certain areas and certain products, but they've long had that state support that keeps the gasoline prices, for example, very cheap there. That contributes to use. Iran for a long time had been an importer of gasoline until they were able to build some refineries using the condensate, the very light oil that is produced in Iran, to be able to get to more self-sufficiency. But still, the inefficiencies in that system, coupled with the lack of investment because those sanctions make it so hard to bring foreign money into Iran, that's really what is the impact there. And so the government is looking to other alternatives. They've been talking about renewable energy, but we haven't seen a lot of that yet. They do have one nuclear power plant, and of course, the nuclear system in Iran is the fruit of a lot of those sanctions because the West has targeted what it thinks is a move to create weapons, which Iran denies, says their system is only for domestic power. So that's really the crux. What they can do is look for the alternatives, but they need that money, Jennifer.
Yeah, of course, and this coming at a very complicated time geopolitically. Bloomberg's Anthony DiPaolo, really great reporting. Great to have you on. Thanks so much. Now let's turn back to the African region. Senegalese President Faye will seek to consolidate his grip on power in parliamentary elections on Sunday to push through a series of reforms needed to steady the government's shaky finances. We're joined now by Mucahid Durmaz. He is a senior risk analyst at Verisk Maplecroft, joining us from London. So, Mucahid, great to get you on. We did report earlier that the Associated Press is saying that the ruling party is comfortable with claiming victory. I wonder, based on what we've seen right now and what we've heard, is there an outcome that the markets are perhaps more leaning towards? What would be more beneficial for the markets at this point?
Yeah, as you mentioned, the provisional results show that the ruling PASTEF party has a clear lead. It's definitely not surprising. We will certainly wait for the official results, but the PASTEF is well placed to secure a parliamentary majority. And after 8 months, it came to the power. The party still enjoys the public backing, partly because the party is able to get its narrative across the public. And that's the important, I think, part to the story. In case of the PASTEF victory, the ruling party's victory will ensure an alignment of executive and legislative, and also allow the party to introduce the reform that it promised. And that will be definitely a welcome outcome for the market, as you mentioned, because investors are keen to see the political and economic stability established in Senegal. Senegal is the country that used to be stable politically, but economically also attractive destination for investors. But since 2021, we've seen this increase in political tension, social unrest, and a sort of political and economic turbulence rocking the country. So the PASTEF victory will definitely align, as I said, the executive branch of the government, the president, but it's also the legislative parliament. So the PASTEF government will be enabled to sort of introduce the reforms and push for the reforms agenda.
Right. And Mucahid, what was interesting is the IMF, even prior to this, had lowered their growth forecast for Senegal. When we think about the reforms that should be top of the list for the president to implement, to turn things around, what would you say?
Well, definitely, when we look at the socioeconomics of socioeconomic parameters in the country, the jobs are important for the voters, but it's also the government's usually saying that we will look at the renegotiating the oil and gas contracts in order to improve the social standards of the people. And there has been much more lots of talks and discussions about it. But I think unlike the other anti-establishment leaders that we have in the continent, Faye and Sonko are more strategic and pragmatist. Aggressive steps against oil and gas companies could further depress the economy, but it's also hindered the government's ability to elevate these grievances, and they're aware of that. So we don't expect the government to demonstrate ideological hostility towards the foreign investors, but rather their review of the contracts will likely include more stringent tax assessments.
And we're seeing that play out differently when you look at West African nations negotiating with oil and gas companies. I want to talk, though, Mucahid, about the price of oil. There's been a lot of talk that we'll see a glut in 2025. Is there anything Senegal can do to potentially benefit from starting to be an oil and gas producer? I mean, what, if anything, can they do?
I think the government will need to find a delicate balance between, obviously, their priority is to extract and higher revenue from the energy projects in order to improve the people's living standards. But it's also the balance will need to be found out between that goal, but it's also maintaining investor confidence at the same time in the country. The country is trying to utilize the increasing global competition over energy resources has also established itself as a leading oil and gas producers in the region, with, as we've seen many energy projects coming online. And as I said, increasing revenue generation from these projects has been the cornerstone of the government development goals, but it's also its narrative to the public that once we have the revenue from the energy resources, we'll be able to improve the people's living standard. So the government certainly expects that the revenue will facilitate their development goals, and they're keen to continue their push to be able to become a main oil and gas producer in the region.
We have to leave it there. Mucahid Durmaz joining us to talk about Senegal's preliminary results out of the parliamentary elections. Senior Risk Analyst at Verisk Maplecroft in London. Thanks so much. Now, coming up for us this week in the region, on Tuesday, Angola and DRC are announcing their rate decisions. South Africa will also release CPI data on Wednesday, while on Thursday it announces its interest rate decision along with Rwanda. And on Friday, also, we will be watching out for the Eswatini's rate decision. And a look at some of the guests we are planning to speak to throughout the week. In the coming moments, we'll hear from the director of EMEA Android Partnerships, and that is Mariam Abdullahi. Tuesday, we speak with EcoBank's CEO, and on Friday, we hear from the chief executive of Investec. Do not miss any of those conversations. Stick with us. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasadja in Johannesburg. Now, Google's Android division is seeing double-digit growth in services revenue across much of Africa and the Middle East. Google's director of EMEA Android Partnerships, Mariam Abdullahi, told me that much of this growth is attributed to the countries in the Middle East aggressively investing in being digital first. Take a listen.
Google has been investing in the continent for a very long time, right? We celebrated our 16th birthday, I think, this year, if I'm not wrong, or is it 17th? 16th birthday on the continent. And we've been investing on the continent in all of that time, from innovation from the continent to infrastructure like the cables I mentioned, to infrastructure like the data regions that I mentioned. Are there more to come? I would say watch this space. Obviously, we need to keep growing with the continent as the continent grows. And as the demand grows, we obviously will grow with it. But we have invested significantly on the continent already, and that is helping drive innovation, economic value to the continent. Let me give you one example, Jennifer. Just a month ago, Publicis did an economic report for Africa. 3 things to take away from there. Number 1 was artificial intelligence is going to add $30 billion on the continent in the coming few years. The second thing that report highlighted is just in 2023, between Google Search and Android and YouTube and Maps, we've already added $16 billion of economic activity to the continent in just 2023, right? So as we go forward, I mean, it would not be wise not to continue investing in the continent, and that's certainly what we hope to keep doing. As you know, in 2021, our CEO committed $1 billion over 5 years onto the continent, which we've used to lay those cables, to bring the data region, to build research centers in Ghana, to build research centers in Kenya, working on incredible innovations such as infant mortality, food security, flood forecasting, languages. These are just some of the things that we've invested on in the continent, and my view is we will continue investing in the continent in all of those areas.
Do you believe that you have the competitive advantage? You mentioned a lot of the users here across the continent do use Android products, but does that mean you have the competitive advantage that you're seeking, or are competitors slowly starting to again see this investment opportunity that you're mentioning and this ability and this need to connect a continent of 1 billion people?
What a great question. Jennifer, this is a continent ripe for investment from many players, not just Google, and we see a lot of competition on the continent, and that's wonderful, because with competition comes creativity, comes innovation, comes choice for the users, and that is actually what we encourage a great deal. As I said to you, we're super humbled that users choose to join the internet using the Android platform. But it isn't by accident, Jennifer. When you do have a free ecosystem that allows, or an open ecosystem, operating system that allows partners to build on that ecosystem, that helps a great deal lowering the barrier to entry, right? When you do have an operating system that is able to power devices at entry-level price points, all the way to the most premium of devices, then that is also a choice that the users have. And then it also allows us to bring the innovation on these devices, whether that is new form factors like foldables, whether that is bringing AI to the device format. As you remember, beginning of this year, we launched a lot of AI features on the devices, right on the handsets. And those are what users are asking for.
That was Google's Director of EMEA Android Partnerships, Mariam Abdullahi, speaking exclusively with us on Bloomberg. Now, coming up, UAE stocks hit a $1 trillion milestone. We discuss the stock market's growth and ambitions to turn Abu Dhabi into a global financial center. Stick with us. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabisaja in Johannesburg. Now, for the first time, stocks listed in the United Arab Emirates are worth more than $1 trillion. The surge has been driven by firms tied to an Abu Dhabi royal, as well as a flurry of local listings. For more on this, let's bring in Bloomberg's equity markets team leader, Farah Al-Bahrawi, who is in Dubai for us. So, Farah, what has gotten us to this level? I mean, this is significant for the region.
Absolutely, Jen. The UAE is now bigger than most emerging markets, barring a few such as Saudi Arabia, India, and China. But really, if you take a closer look, one company, international holding company, comprises 25% of the index. That firm is chaired by Sheikh Tahnoun, who is brother to the president and national security advisor and one of two deputy rulers in Abu Dhabi. So his firms have really led that surge in the United Arab Emirates market cap. If you look at the makeup of the Abu Dhabi index, his firms make up at least 2/3, if not more. So it is a little bit different, but we did have that local flurry of listings from government and from private firms coming to the market, and there has been a lot of demand. So that's also helped really grow the market. But the question is, really what comes next, and how does the UAE bring even more and more international investors into its market?
Right, and how much can we read into this milestone, Farah, for what this means for capital markets in the region?
It's been long coveted by the Al Nahyan ruling family in Abu Dhabi. They think that this will encourage locals to keep their money in the market, but also attract international ones. It is a pretty big milestone. We have two countries in the Gulf making up exchanges of about over 4 trillion at this point. So they're not insignificant. It's not a region that investors can continue to overlook. And the weight on the emerging markets index for the MSCI one is increasing as well. The UAE comprises 1.2% of that index, so just automatically it gets passive inflows via that direction.
Really fascinating story happening there. Bloomberg's equity markets leader there in the Middle East, Farah El-Bahraoui. Thanks so much for joining us. Quick check on the markets and where they're positioned ahead of the trading day. U.S. equities seeing a bit of green across the board for U.S. and Euro futures. We'll watch to see whether or not the Trump trade picks up some steam again this week and what that means with NVIDIA earnings and a number of other earnings that we are paying attention to this week. Well, that is Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Stick with us for Daybreak Europe. That's up next with Tom McKenzie. This is Bloomberg.